Ladies and gentlemen, good day and welcome to Asarfi Hospital Limited Q4 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Jain from Hem Securities Limited. Thank you, and over to you, Mr. Jain.
Thank you, Renju. Very good afternoon, ladies and gentlemen. Thank you for joining Asarfi Hospital Limited full year ended 31st March 2026 earnings call. Joining us on the call today from the management team, Mr. Harendra Singh, CEO and Managing Director of Asarfi Hospital Limited. We will now commence the call with the opening thoughts from the management, post which we will open the forum for the Q&A session, where the management will be glad to respond to any queries that you may have. Before we move to the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and its subsidiaries, which are based on belief, opinion, and expectation of the company's management as on the date of this call. The company does not assume any obligation to update these forward-looking statements if those beliefs, opinion, expectation, or other circumstances change. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I hand over the call to Mr. Harendra Singh, CEO and Managing Director of Asarfi Hospital Limited, to take it forward. Over to you, sir.
Thank you, sir. Good afternoon, everyone, and a very warm welcome to the third earnings call of Asarfi Hospital Limited for the financial year 25-26. I am Harendra Singh, CFO of Asarfi Hospital Limited, and I sincerely thank you all for taking time to join us today. Our investors presentation for Q4 and FY26 has already been uploaded on the stock exchange platform as well as on our website. We hope you have had the opportunity to review the same. As a part of our continued commitment towards transparency and shareholder engagement, we have voluntarily adopted quarterly financial reporting despite SME platform requiring half-yearly disclosure. Before we begin, I would like to remind everyone that certain statements made during today's discussion may be forward-looking in nature and are subject to uncertainties. A detailed disclaimer is available on the slide number 2 of our presentation. Let me begin with a brief overview of the journey and key developments during the year. For more than 2 decades, Asarfi Hospital has remained committed to deliver affordable and quality healthcare services across Dhanbad and surrounding region of Eastern India. From a single hospital set up in 2005, we have evolved into one of the leading regional healthcare provider in Jharkhand, currently operating 2 hospitals with a combined bed capacity of 350, including 285 beds in our super specialty hospital and 65 beds in our cancer hospital. Our super specialty hospital continues to strengthen its position as a trusted tertiary healthcare center in the region, offering 23 plus specialized departments including cardiology, neuroscience, general medicine, orthopedic, gastroenterology, pediatrics, and critical care services. During financial year 2026, the unit delivered a healthy operational performance with a strong growth in high quality treatment, higher ICU utilization, and improved case metrics. We also expanded our cardiac care capacity from 25 beds to 45 beds and strategically restructured the cardiology unit to enhance operational efficiency and support the growing demand for specialized cardiac care. ARPOB for the unit improved significantly to 23,000 rupees, while total surgeries increased by 26% year-on-year for more than 6,300 procedures. Our cancer hospital, operationalized in financial year 24-25, continued to scale steadily and remains one of the one of only 3 dedicated cancer hospitals in state of Jharkhand. The facility witnessed improvement in occupancy to 42% during FY26, supported by growing traction in radiation oncology and better realization from complex oncological treatment. During the year, we further strengthened our oncology infrastructure through installation of GE Healthcare dual detector SPECT gamma camera, enhancing our nuclear medicine diagnostic and therapeutic capabilities. Moving to our financial performance of FY26 on consolidated basis, we reported a strong year-on-year growth with revenue from operation increased by 42% year-on-year to 173.5 crores as compared to 121 crores FY25. EBITDA grew by 42% to 35.3 crores with EBITDA margin remaining healthy at 20%. EBIT increased by 44% to 26.4 crores, while profit after tax grew by 58% year-on-year to 16.7 crore with PAT margin improved to 10%. Operationally, as well as the year reflected robust momentum across key parameters. IPD revenue increased by 46%, while OPD revenue grew by 34% during FY26. Inpatient volume crossed 16,000 patients and outpatient volume increased to approximately 1.38 lakhs patients during the year, reflecting our growing regional reach and strengthening patient trust. Coming specifically to Q4 FY26, we delivered consolidated revenue of 45.2 crores, registering a growth of 29% year-on-year. EBITDA stood at 7.7 crores with EBITDA margin at 17%, while PAT increased by 9% year-on-year to 3.9 crores. During the quarter, we also witnessed a strong growth in IPD revenue driven by improved realization, higher surgical volume, and better case metrics. Cardiology, general medicine, neurosurgery remained our top contributing specialties, while orthopedic emerged as one of the fastest growing departments during the quarter with a strong growth in advanced procedure and surgical intervention. In addition, we operationalized the advanced Philips Azurion Cath Lab during March 2026, further strengthening our interventional cardiology and cardiac care capabilities. Looking ahead, we remain optimistic about the long-term opportunity in Eastern India healthcare market and continue to focus on sustainable growth with operational discipline. Our Vision 2028 roadmap targets scaling overall bed capacity to 500 plus beds, achieving revenue of around 400 crores and improving EBITDA margin to 23 to 25%. Key growth drivers over the coming years will include expansion of cancer hospital capacity from 65 bed to 150 bed, establishment of bone marrow transplant unit and ramp up transplant services and exploration of strategic management contract and partnership in the nearby regions. Additionally, as a part of our continued commitment towards community healthcare and social responsibility, we undertook impactful CSR and preventive healthcare initiatives during the year. Through Asarfi Charitable Trust, we deployed 21.3 lakh towards an HPV screening and awareness program, benefiting around 650 underprivileged women in Dhanbad, focused on early detection of cervical cancer through RT-PCR and DNA testing. We also continue to conduct healthcare awareness campaigns, health camps and outreach initiatives across multiple districts of Jharkhand to improve access to preventive healthcare services and strengthen community engagement. Asarfi has delivered revenue CAGR of 28%, EBITDA CAGR of 34% and PAT CAGR of 31% over last 4 years, with shareholders' investment returning CAGR 39% in last 3 years. We hope to continue the same journey in times to come as well. With a strong regional positioning, improving medical infrastructure and growing clinical capability and increasing patient trust, we believe Asarfi Hospital is well positioned to continue its journey as a scalable and differentiated healthcare platform in Eastern India. With that, I would like to hand over the call to the moderator to open the floor for question and answer. Thank you once again for your continued trust and support. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Nitin Gupta, an individual investor. Please go ahead.
Thank you for the opportunity and congratulations for exceeding the guidance. Am I audible properly?
Yes. Speak a little louder, please.
Okay. I have a couple of questions. The first question is, what is the current situation of with respect to government-funded Ayushman Bharat scheme? And was it impacting both of our hospitals or cancer only?
Ayushman Bharat scheme is operational in our cancer hospital only. Our focus primarily remains on schemes which has better package rates. Our Ayushman Bharat contribution to cancer hospital is around 15%.
15% of the total or of the only
total cancer revenue.
Okay. And the second question was with respect to the CapEx. So I see in the guidance, like we are targeting to increase the bed capacity by 150 in the next 2 years. So
yes.
How much CapEx can we expect for this?
To increase the bed capacity from 65 to 150. Actually, we don't require very high capex investment. It will be around 2-3 crore rupees, which will be met through internal accruals.
And what about the remaining?
We require only 2-3 crore rupees for increasing the bed capacity because most of the things has already been done and all equipments which requires heavy investment has already been done, and will not require too much investment because OT is already there, ICU is already functional. So bed capacity will increase, but per bed investment will not be that much.
Okay, so we do not require any additional fund or anything of that sort?
Yes.
Good. Okay. And last small question, any plans for the main board migration?
Yes, we have decided that we will be migrating to main board. We are figuring out the eligibility criteria and process. We will be eligible after the month of July. We have initiated the process. We will migrate.
Okay. Those were my questions. I'll get back to the queue. Thank you.
Thank you, sir.
Thank you. Next question comes from the line of Nipum Khemka with CD Research. Please go ahead.
Yeah, hi. So actually, I wanted to ask that why there was a delay in the bone marrow facility. Why is it not live still now? Because previously we told that it will go live in FY26, and I believe FY26 is over, and we have delayed that thing. So why is that?
Basically, in Jharkhand, organ transplant policy is very not in a good shape, and we are trying to obtain approval for organ transplant facility. Other things have been already arranged. Hopefully, we will get that permission very soon, and once the permission is there, we can start. So delay is caused due to the procedural delay because the policy is not in place. So approval is taking a little more longer. In the previous call, we had communicated that it will be started in around last quarter of 2026 financial year. We are trying to get it done as soon as possible because doctors have been hired. Everything is done. Only permission is required.
Okay. And my second question was regarding to the merger, the proposed merger that the promoter has, like another hospital that will be coming under this company. So what is the status of that, and why is it still not done? Like, because we are facing a lot of delays in these things.
Yes, there is delay because 2-3 shareholders had died, and the heirs have not inherited the shares of those expired shareholders. And because of that reason, we have not been able to push that matter forward. We are in continuous touch, and hopefully it should be done this financial year.
Okay. And lastly, on one broader question, like where do we see ourselves in the next 5 years? Like given the, like I'm not talking about the revenue growth, but in terms of like, are we seeing to expand ourselves through managing more hospitals, or let's say foraying into different facilities or anything? So anything that you can share or throw some light on?
Definitely, sir. We are thinking and planning very seriously to expand. But as you know that every day government is bringing in new regulations with regard to the treatment on cashless basis, and that puts a lot of pressure on the cash realization because of the every day one or two new scheme is being launched to provide cashless treatment. We are trying to develop a model which will be most suited to us. So we are definitely thinking is in pipeline. We are planning to increase number of hospitals under management, but what exact model we will be moving ahead, that is why we have not added hospitals, because there are hospitals available, plenty of hospitals available everywhere, because people are feeling it very difficult to manage hospital, and all because of the cash realization from the cashless patient. Ayushman Bharat scheme, they have very small package rates, and realization becomes difficult. So we are thinking very seriously, and we have worked out on one or two models on which we will be going ahead. So definitely in future you will be seeing that we are expanding and improving number of beds under management.
Okay. Thank you. Best of luck and best of luck.
Thank you, sir. Thank you very much.
Thank you. Next question comes from the line of Riddhi Agarwal with Family Office. Please go ahead.
So one of my questions is, why was the cancer patient decreased this quarter, and do you expect the same in coming half year or the full year?
In the last quarter, there was some scheme launched by government of Jharkhand, and there was some changes in the approval system. We take so many government-sponsored scheme patients after the approval is received. So there was some changes in the methods, and there was administrative delay in the approval, and that is why some few patients got decreased in the last quarter.
So, sir, are we expecting this kind of discrepancies from the Jharkhand government scheme in future, or are we in line with our?
It appears that things have settled down, but as you know that government schemes and payments are somehow related to political stability. There is some uncertainty in the political spectrum also, but we don't think that it will impact us that way.
Sure, sir. Thank you, sir. So can you just put into numbers that how much percentage or in revenue guidance you are expecting from cancer this segment only?
They contribute to 10-12% of revenue, and if in case of administrative delay, there will not be much impact on overall revenue.
And it will be same for next FY27, 10% to 12%?
Not exactly, not sure, because you cannot predict that what they are going to do. At present, we are getting approval as usual, so I don't think that it will have impact in this financial year.
Okay, sir. Thank you so much. I will join the queue for some other.
Thank you. Thank you, ma'am.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Achut with individual investor. Please go ahead.
Hello, sir. What will be the EBITDA margins for FY27?
Sorry for interrupting, Mr. Achut. We cannot hear you. Can you please speak a little louder?
Hello, am I audible now?
Yes, please go ahead.
Yeah. I just wanted to know what will be the EBITDA margins going forward, like in FY27.
Sir, we are trying to bring case mix and margins in such a way that EBITDA remains at achieves 23 to 25%. This year we have achieved 20% EBITDA. We definitely would like to push it to at least 22% next year.
Okay. And sir, I am able to see like in March 2025, we have an other income of 3.66 crores, which is missing this year. So what is this other income and I also understand.
Details of other income will be mailed to you. I request you to kindly send this question on our email. We will send the breakups and details.
Okay, thank you.
Thank you, sir.
Thank you. Next question comes from the line of Gaurav Sanghvi, individual investor. Please go ahead.
Yeah. Hi. Sir, I'm audible?
Yes, sir, you are audible.
First off, congratulations for the result. Sir, my question is, what could be a top-line target for FY27? As you have mentioned, it will be like a 260 CR. So are you confident to achieving that top-line amount?
Yes, sir. We are working very hard, and we should be able to achieve it.
Okay, sir. And also, I have read that you targeted for 13 to 50% PAT for the FY27. So
yes, sir. Yes, sir. We are as we said that we are trying to tweak our mix. We have started doing our activities in 10 neighboring districts, and when people come from distant places, they tend to be ready to pay more. Apart from that, we are working very hard on the front of cost management. We are trying to reduce the cost also. So probably we should be able to achieve it.
Okay, sir. Last question, short question from my side. Our ROE is less than our expected growth. So are we going to take any kind of debt for the further growth, or it's possible from internal accruals?
It is so far, as of now, we have not decided that we will be going for any debt. It will be managed through internal accruals. But because government brings on, every day some new opportunity comes. So you have to be ready. As a company, you should be able to grab the opportunity. There are certain news circulating in Jharkhand, and we are looking at it as an opportunity. So in case of any major capex requirement, we will definitely inform.
Okay, so sir, definitely it's my last question. That are you seeing momentum growth continue for the next 4 to 5 years, as we are growing almost like 50% on CAGR basis? So it's possible to grow for next 4 to 5 years?
Definitely, sir. So far as PAT is concerned, our entire focus is that we should be able to tweak or progress in such a way that our PAT number grows at the same rate. At least PAT and EBITDA must grow as we are growing since last 3-4 years.
Okay, sir. Thank you so much.
Thank you, sir. Thank you very much.
Thank you. A reminder to all the participants that you must press star and 1 to ask a question. Next question comes from the line of Prashant Sharma with Him Securities. Please go ahead.
Hello, sir. So I have also got a couple of questions. The first one is related to our...
Mr. Sharma, sorry for interrupting. There's a lot of background noise. Can you speak a little louder?
Okay. Just give it. Yes. Now?
Yes, please
So
go
my
ahead.
first question is related to the cancer hospital business. So there's a sharp decline in ARPOB during the quarter, which is partly due to lower volumes and delayed government reimbursements, which suggests some volatility in this particular aspect. So so what is the EBITDA margin for this particular facility, and how should we think about the margins going forward, and what would be the utilization level for this asset over the next 2 to 3 years?
Sir, to answer your question, we require some number crunching, and if you could write a mail to us, we'll reply very specific to your questions. Just to give an overview, that cancer hospital, last year we had a revenue of 20 crores. This year we have achieved a revenue of 33 crores. It is, so far our expectation is concerned, we are very bullish on this, and cancer hospital has lots of potential because there are no cancer hospital in this area. So we think that the numbers which we have already given in the presentation will be achieved. With regard to your specific question, I would request you to send a mail. We will give a very specific reply to your question.
Sure, sir. I will write that to you. And so my next question is, so regarding our aspiration to scale revenue to 400 crores with improved EBITDA margins, so it would be helpful if you could break down the key growth levers such as bed expansion, occupancy ramp-up, and ARPOB improvement, transplant services, and O&M contracts, and indicate which of these are expected to be the biggest contributors going forward.
Major contribution will come from growth in the cancer hospital business, because cancer hospital has not achieved its potential based on the market in which we are playing. It is only we are at 42% of capacity utilization of 65 beds, and we are going to increase the number of beds. Plus, revenue not only comes from number of beds, rather it is, daycare procedures are so many in cancer hospital. So the major contributor will definitely be cancer hospital. But apart from that, in down the line, we plan to acquire hospital, we plan to add beds. So the number 400 CR, the projection which we have given, is based on the volume addition, number of bed addition, and other details which has already been shared in the presentation.
Okay, sir. And sir, regarding our bone marrow transplant, for which approval has been delayed due to various government administrative delays. So, when do you expect that it would come online?
Sir, it should take another 4 or 5 months, because government is very slow, and sometimes I feel that their priority is different. Though there are no bone marrow transplant is not going on anywhere in the Jharkhand, but still there is a delay in the process. What we can do? We are trying very hard. We are rather following it up with the minister directly, but things are not moving as desired.
Understood, sir. Sir, are you targeting any revenue figure from this particular area related to bone marrow transplant only?
This bone marrow facility and bone marrow revenue primarily comes from it comes from the government schemes. Once the scheme starts, once the facility starts, then we will have to market. So there will not be much of revenue addition from this department in FY27, but hopefully in FY28 it will have good contribution. Hello?
We have lost the line of the participant. We'll promote the next. That is from the line of Nitin Gupta, an individual investor. Please go ahead.
Yeah, thank you for giving the opportunity one more time. Regarding the guidance, so does this include revenue from any possible acquisitions, like one hospital which we were planning and we had a discussion also in this call?
Yes.
Is it organic or is it inorganic, basically?
Mix of both, sir. It will be organic and inorganic both.
Okay. And just a feeling like this guidance for this and the next year is, don't you think it's a bit too aggressive? Especially considering that last 3 quarters we were at around 45 odd crore.
Sir, it may appear aggressive, but when you see that in last 20 years we have built system and we have opened only 2 hospitals, so now it is time to be aggressive.
Okay. And even final thing, like in the last quarterly call, we said that we are targeting to reach, say, 1,000 bed capacity before financial year 30. So do we still hold that? Like one
Yes,
person
sir.
asked, like, yeah.
Yes, sir. It is still, sir.
Okay, then. Thank you. Thank you for that.
Thank you, sir. Thank you very much.
Thank you. Next question comes from the line of Prabhat, an individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. The question is continuation of the previous questions from the participants regarding the guidance. I want to be a bit more specific. So 260 crore of revenue we are targeting for next financial year. So what I understand that from cancer hospital there is 165 to I think 120 or 130 bed addition we are talking about. Are we also talking about some other bed additions in the other hospital? Or, I mean, to be more specific, what driving us to this number? I mean, what giving us confidence to reach 260 crore?
Yes, Mr. Prabhat. We have already added in the last quarter 20 odd beds in our cardiac facility, and we plan to add beds in the cancer hospital in the coming financial year. So, this financial year. So this revenue will come definitely from increase in revenue in the existing super specialty hospital and cancer hospital both, apart from other units.
Right. Okay. And do we think that from quarter 1 or quarter 2, from cancer hospital point of view, when this revenue will be start coming in?
We are already on it. The first quarter has already, 2 months have passed. We are working on, and we are, as I said, that we are focusing on 10 districts of neighboring districts, and result has started coming. Our patient flow has increasing. One important yardstick is how many new cancer patients you are treating. We are monitoring that number very with our full aggression, and we believe that the number which we have projected will be achievable.
Right. Okay. One more question, maybe. Regarding the acquisition, the inorganic growth which we were talking about, is this like a thought or aspiration or really, or is it real substantial we are thinking I mean, we have something we are considering on, or is just a thought or aspiration at the moment?
It is not aspiration. It is almost everything has been settled. Only technical issues are being resolved. So it is not aspirational. It is already, this will be materialized in this financial year. Number one. Number two, you need to keep modifying the model on which you are working unless or until you are ready to change. And with the market, when some information comes and if you don't adjust accordingly, things does not remain the same as desired. So we are trying to remain dynamic in terms of our working. So the number one, it is not aspirational. It is already technical issues are there which is being solved, and we are bullish so that we can achieve the number which we have projected.
All right. Thank you. That's all. All the best.
Thank you, sir. Thank you, Prabhat.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Prashant Sharma, with Hem Securities. Please.
Hello. So my question is, given the increase in receivables, particularly in the context of delayed reimbursement and the government scheme, how should we assess the quality and aging profile of receivables? And additionally, do you foresee working capital remaining elevated as the business scales further?
When you will analyze our data, that how much debtors we had in last quarter and then with the recent quarter, we have improved quite a lot. We know that data realization is key. We are working very hard on that. And with regard to aging, it is around 6 to 7 months.
Okay.
Any further questions?
No, sir. That's all my questions.
So thank you very much, sir. Thank you very much.
Thank you. Next question comes from the line of Siddharth Jain with HSS AMC. Please go ahead.
Hi, sir. Thank you for taking my question. So the first question is regarding the total cancer bed capacity in all of Jharkhand. Since we are one out of the 3 cancer hospitals and we hold 65 beds, like what would be the total % of supply capacity with Asarfi?
Total bed capacity, operational bed capacity in
Yes,
Jharkhand as of now is less than 500.
That is for just for the oncology side, right?
Just for the oncology side, yes.
All right. That answers my question. And so the other question is regarding the Healthcare Management Research Institute that is currently under construction. What sort of capex are we expecting for the coming year?
It will be in the tune of 8 to 10 crores.
For the coming fiscal year?
Yeah.
8 to 10. And you had mentioned for unlocking the current capacity, additional capacity for super specialty and oncology, we would require at least 2 to 3 crores more. So the current year capex would be between the tune of 10 to 12 crores?
Yes,
is that right?
less than 15 crores, yes.
Less than 15. And so how much cash are we holding in the bank?
We are holding 8 to 10 crores we have.
Okay, sir. So a debt would be a suitable plausibility then?
Definitely, sir.
Okay, that answers it. Thank you.
Okay. Thank you very much, sir. Thank you very much.
Thank you. A reminder to all the participants that you can press star and 1 to ask a question. Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. And now I hand the conference over to Nitin Jain for closing comments.
Thank you, Renju. On behalf of Hem Securities Limited, I would sincerely like to thank the Asarfi Hospital's management team for taking the time to join us today and for responding to all the queries in such a detailed and helpful manner. I would also like to thank all the participants for joining the call and for their active participation. With this, I would like to hand it over to Renju for closing remarks.
Thank you. On behalf of Asarfi Hospital Limited, that concludes this conference. Thank you for joining us. You may now disconnect.